Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second bearish black crow yesterday and a suitable follow-on lower after the previous session's combined bearish harami and bearish double pattern. It continues to show the market's reluctance to stay above the resistance of the 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. Beyond this line in the sand is a congestion dating from late April and early May, stretching from this 50% Fibonacci line up to the interesting and influential neckline of the July 2017 to November 2018 move, and that's currently at 110.88, and it's highlighted in dark blue on my daily chart. This neckline had capped the market in late April and May and allowed the construction of the mid-March to date bull channel, currently 106.80 to 111.47. It's the one highlighted in bright red on my daily chart. Meanwhile, on the downside, we saw the market finally punch down through the flatlining short medium moving average, currently at 108.76, and close below it. Surprisingly, right on the short moving average, currently 108.69. Further down, we have the support of the ever so slowly rising medium moving average, and that's currently at 108.18. Overall, we still remain within the March to date bull channel. Now, so far today, a small attempt lower, but not by much at the moment. Cable, aka sterling against the US dollar. A lower but still indecisive spinning top yesterday. It was nevertheless a second bearish black crow as well, which I suppose is a suitable follow-on lower to the previous session's very interesting bearish engulfing pattern and bearish opening black Mariposa. It was also the second consecutive close below the recent support of the interesting 50% Fibonacci line of the June 2016 to September 2022 move at 126.99, plus the September 2020 low at 126.72. These original resistances that turned into supports have now become resistances again. They had capped the market back in early to mid-May, so they appear significant. Further above, we have the overhead congestion combination made up from the November 2020 low at 128.52, plus the upper bull channel line currently at 128.98, and a powerful looking July 2021 to date optimized downtrend, which you can see angling down in dark blue on my daily chart, and that's currently at 128.90. These three resistances reached their narrowest and most powerful point yesterday. So if there was to be an attempt higher, then it would need to be a really good attempt, or else wait until after this week, as that is when the combination of forces overhead will have passed their zenith. Meanwhile, below we have the combination of the lower bull channel line currently at 125.33, and the very slowly ascending short medium moving average, currently 125.37. Beyond that, the next support will be the slowly rising medium moving average, currently 123.79. So far today, well, not much, looking like an even smaller indecisive spinning top than yesterday. Possibly a bullish harami, perhaps, just. Euro sterling. A reactionary bearish dark cloud cover pattern yesterday after the recent run-up. Interestingly, the fall was only as far as just above the approximate top of the recent range between 8600 to 8545. Overhead, we still have the April 2020 low at 86.69, the gateway to an area of congestion that was built up as a rectangle pattern and halfway hesitation back in May. This stretches up to the April 2021 high at 87.19. Meanwhile, below, the key level to watch for is the April 2021 low at 84.70. This had been the base of support throughout June. Now, so far today, a further move lower to this recent 8600 to 8545 band. US dollar against the Indian rupee. A second bullish white soldier yesterday, and a follow-on to the previous session's bullish engulfing pattern and bullish opening white Mariposa, which in turn was a follow-on higher to the earlier two-day homing pigeon pattern. This continues to fall in line with my suspicion that the market has been building up a congestion area, roughly between 81.90 to 8200. You can see this with the number of closes around this area, and a few highs and lows in there as well. over recent weeks. Looking overhead, the market almost made it up to the slowly rising long moving average, currently 82.14, but was stopped short, surprisingly, by the declining short moving average, currently 82.09. Now, just above the long moving average, you have the flatlining short medium moving average, currently 82.18. And above that, the slowly dipping medium moving average, currently 82.23. They're all fairly close together. Looking further down, we have an early May piece of closing based congestion between approximately 81.65 to 81.80. Overall, we are still, arguably, still in a hesitation period after the pullback from testing the overhead broken since seemingly repaired upper time, currently at 82.48, of the October 2022 to January 23 mildly bearish shift pitchfork, highlighted in dark green on my daily chart. This hesitation period may be coming towards an end. Now, separate to all this, another recent feature just about remains. The recent bow tie formation of the short moving average, currently 82.09, the short medium moving average and the medium moving averages. This triple crossover pattern set up the opportunity for a move higher as all the moving averages went in and out of the bow tie in the right order and were mainly pointing higher. Theory indicates that between 20 to 25 sessions after the crossover, we may see a move in the direction of the bow tie as a result. Thus, we are just past that period today, as it was between the 20th to the 27th of June. And so far, there has not been any overwhelming move in either direction. So it's been quite disappointing. We also have another pattern, an April to date potential roof pattern highlighted in bright red on my daily chart. It is not ideal as a pattern, but it's still there, and the downtrend to this is a little higher, currently at 82.31. Finally, we have the ascending triangle formed between January to March, highlighted in dark blue on my daily chart. The market continues to have difficulties in interpreting this pattern. So far today, a lower open, followed by a more or less a straight move, lower, though we are back up again and still within yesterday's range. US dollar against the Brazilian real. In its own way, yesterday was an interesting indecisive spinning top pattern. This came after this week's move back up within the breached lower bear channel, currently at 481.05, highlighted in bright red on my daily chart, and that's of the November 2022 to date bear channel. Now, this move up could be seen as an attempt to repair the damage we saw over the last 2 weeks down to this lower bear channel line. But where we have closed over the past 2 days is perhaps of the more immediate interest, as we've closed right on the middle time, currently at 484.97, of the broken but seemingly repaired late July to late September 2022 bearish shift pitchfork. This pitchfork, highlighted in dark blue on my daily chart, is important, as it has shown the bearish angle of attack of this market way before the bear channel was created. Additionally, you also had a second consecutive close over the 50% Fibonacci line of the June 2019 to May 2020 move at 484.26. Now, looking above, we now have the 2021 low at 489.08, which acted effectively as a low in both April and May, and the slowly declining short medium moving average, currently 493.51. Now, I will continue to watch the action around the bear channel and now also the middle time with interest, as sitting over all of this is still the shadow of the monthly key reversal down we saw back in January, and now a possible monthly key reversal here this month as well. So if we close tonight either above 505.75 or under 498.60, then we'll be on. Anything in between and we'd have the lesser outside month instead. At the moment, we are looking at a monthly key reversal down right now. US dollar against the Mexican peso. A higher but still indecisive spinning top pattern. Yesterday, the market continues to hang around the previously breached September 2022 to date lower bear channel line, currently at 1706.52. We're also still testing a mess of supports made up from the core band of support between approximately 1703.90 and to 1701.35, which has as its chief constituent the April 2016 low at 1703.89. Additionally, further down, we have the combination of the middle time, currently at 16.84 3/4, of the December 2022 to March 23 bearish Andrews picture, which is highlighted in bright red on my daily chart, supplemented by the lower trend line in dark green of the March to date descending wedge pattern, currently at 16.84.40. The lower trend line, which for a while had been just below the middle time, is now mingling in with it. What all this does is show that this market is getting squeezed tighter and tighter between supports and resistances, and I have a strong suspicion something is going to give way, and in a not too distant future. So far today, more squeezing and testing, this time of the March 2016 low at 17.0923. We are still well within yesterday's range.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.